MSTR stock is still in a strong bullish trend, even though at stand right now, its technical conditions are deteriorating. Its momentum is waning, and if support levels are further violated, further weakness is probable. The stock has outperformed the market over the last 50 trading sessions when compared with the S&P 500. There's an indication that its 40-day moving average, which underscores its intermediate term trend, is bearish at this time. MSTR chart formation is showing signs of reversing its recent trend. If the stock closes below $348, it's $348 is right here, as it right here, somewhere around here. You can see that there's a confluence of its the 10 and 21 day moving averages. If it closes below that, then there's a good chance that we are looking at further weakness. A change in trend may be confirmed. A change in trend may be confirmed. You know, there's the stock is trading obviously above its rising 50-day moving average. If the stock falls below this important support level, it could trigger additional selling pressure, and also it may find support, from its 200-day moving average. Okay, and then the stock is in a short-term overbought condition. No, over the last 50 trading sessions, there has been more volume on down days than on up days, indicating that MSTR is under distribution, which is a bearish condition. Okay, so yeah, it's trading above its 200-day, 40-day moving average currently. So yeah, slightly the 40-day, the 50-day moving average will be somewhere slightly above, somewhere around here. So it's currently trading above that. So these are some critical things to watch out for on the stock. So there's an upper projection here of $402.68. There's also an upper projection of 434.65 and 465.58. Negated upper projections include, let's see, goes all the way towards 851.27, then never materialized, and 782.67, 65, 66666.67. These never materialized. 526.1. Maybe at some point one day they may. Okay, let's have a look at its 4-hour chart and see what we have. And I failed to mention that Bitcoin has, as things stand right now, is below $104,000. There are no upper projections here. We can quickly look at Bitcoin, BTC USD, and we'll find out what things are as things stand right now. Currently at okay, it has returned fire now above. It's now at 105,000. We saw rejection at 108 on this 4-hour chart. All upper projections on the 4-hour chart go all the way towards 116,000, $162.56. Interesting, really interesting. So let's return to MSTR. Let's return to MSTR and go back to its daily chart and see what we have. There's some piece of there's a piece written by somebody in Dow Jones. It's saying here, behind MicroStrategy's Bitcoin bet, investors who usually play it safe. Let's see. They say Michael Saylor and his company MicroStrategy are making a massive bet on Bitcoin. Their biggest backers include an unlikely group of insurance companies, mutual funds, and other usually conservative bond investors. The software company turned itself into a Bitcoin whale and now owns some $48 billion in the cryptocurrency. It funded those purchases partly by selling convertible bonds, which are debts that can eventually be converted into shares if the stock price rises to a specified level. Last year alone, MicroStrategy issued $6.2 billion of convertible debts, the most ever issued by a single company in a calendar year, according to Bank of America. Perhaps most surprising, MicroStrategy's most recent convertible bonds promise investors no interest and require the stock to climb by 55% before converting into shares. Yet demand from investors have been violent, rabid. Alliance Global Investors, the investment management arm of German insurance company Alliance, and its strategic partner, Voya Investment Management, own about a quarter of a recent MicroStrategy convertible bond issuance. Calamos Investments and State Street also are big holders of the convertible bonds. None of the four firms are known for their big Bitcoin bets or other risky wagers. So why are they gobbling up MicroStrategy's zero coupon on which are unsecured bonds? For some, the answer is found in Bitcoin's performance and promise. For others, it's a part of a complex trading strategy that benefits from the stock's volatility. But many other investors explain their purchases of MicroStrategy's convertible bonds simply. They believe in Bitcoin, and these investments are slightly safer than buying the coin or MicroStrategy shares because debt holders would stand to make some recovery even if MicroStrategy failed. So you can look at it as a chicken way to play Bitcoin, according to Eli Pass, co-chief investment officer at Calamos Investments, who owns roughly $456 million of MicroStrategy's convertible bonds based on current prices and recent filings. But if you don't think Bitcoin has a good chance to go up, then you probably don't want to be in any MicroStrategy capital structure, he says. More crypto companies have begun to adopt MicroStrategy's playbook, which is crypto-linked companies, rather crypto-linked companies issued more than $14 billion of convertible bonds globally last year, according to Michael Younger Worth, head of global convertibles strategy at Bank of America Securities. Bitcoin mining company Mara, for one, raised more than $2 billion. So Wall Street firms are already searching for different ways to capitalize on the popularity of what they have dubbed Bitcoin bonds. Strive, Strive, a money manager co-founded by Vivek Ramaswamy, filed in late December for an exchange for an ETF fund that would hold convertible debt securities issued by MicroStrategy and companies with similar strategies. Thanks to Bitcoin's monster rally over the last 2 years, the convertible bonds have mostly outperformed the broader market, with some generating returns of more than 100% since issuance. Competition is vicious among traders in the bond market, where even a few hundredths of a percentage point can be the difference between a big bonus and a pink slip. So Bitcoin prices have soared 155% since the end of 2023. MicroStrategy's shares have climbed even faster, rising about 450%. The stock is trading at roughly twice the value of a Bitcoin it holds. Bitcoin skeptics say MicroStrategy is playing with fire, and its stunning run is part of a broader investor euphoria for speculative assets that will eventually collapse. Beyond betting big on Bitcoin, which is a notoriously volatile asset prone to furious rallies and spectacular crashes, they caution that all the serial convertible bond issuers, including Enron and WorldCom, have ended up in bankruptcy. So MicroStrategy isn't done yet. The company is expected to issue an additional $18 billion of debt as part of its plan to raise $42 billion to fund its Bitcoin purchases over the next 3 years. Some investors, including Alliance, were buyers of MicroStrategy's convertible bonds years ago and scored big profits. Others have been buying the bonds simply because MicroStrategy makes up makes up 3.6%, makes up to 3.6% of the related indexes that are there. It's judged against. That index is ICE B of A, all US convertibles index. So it makes up to 3.6% of the indexes it compares. It's judged against. So hedge funds like MicroStrategy that make hedge funds like MicroStrategy debt because it allows them to execute complex strategies such as buying the company's convertible bonds while betting against its stock, a tactic that benefits from volatility. So MicroStrategy's volatility lends itself well to the hedging strategy known as a convertible arbitrage. In such trades, investors buy the bonds and sell the shares short, betting that the underlying stock will remain volatile. So the more the stock sways, the more profitable the strategy becomes. That is because a convertible bond is a hybrid security. A hybrid security composed of a bond and a call option that converts the right to convert the bond into a stock at any specific price. So, in other words, they hold the bonds, and then the bond will convert to shares. So when they sell the stock, they are when they get into trouble from their short selling, they already have a cover in the bond in the rights that the bond confers on them. So that's what's it saying there in essence. The owner of a convertible bond is long the option. The owner of a convertible bond is long the option. You can see that. So they are always selling the stock. They're always selling when the stock goes higher, and they're buying when the stock goes lower. Says to stay hedged, according to James Buckham, co-chief investment officer at Wellesley Asset Management of arbitrage of the arbitrage strategy. Okay, so this is what's going on. That is probably amongst the reason why the stock has just continued to go higher and higher, especially all the way up till November of last year. So his firm, which specializes in convertible debts investing, doesn't own any MicroStrategy bonds because of the high risk they carry. So some bankers and advisors say the convertible bond market is experiencing crypto indigestion after a flurry of deals last year. So Bitcoin's volatility has declined as its price has moved higher. Prices of MicroStrategy's most recent $3 billion convertible bonds due in 2029 have fallen sharply over the past 2 months, while the company's shares have fallen about 20% from the record highs of it's printed in November. So the market's still digesting the crypto converts wave that came in the fourth quarter of last year, 2024, according to Brian Goldstein, who runs the convertible practice at the advisory firm Matthew South. I don't think that it will continue with the same intensity, but there's definitely still a bid in the market for appropriately priced deals. So see what you make of all of these and digest the reason why we have seen MicroStrategy's share price reach the highs that it printed as of November of last year. This was Wednesday, the 20th of November. I printed at $405.24. And thank you very much for watching this video.